Just coming up to 9:20 here in Paris, time for business. I'm joined by Will Edwards. We're going to begin, Will, in Italy, where Mario Monti is finding, perhaps no surprise, that changes to the labour market are not that easy to make.
No, I mean, he has got quite a few reforms through in his first few months in power. Of course, he took over in November from Silvio Berlusconi, a technocratic prime minister in Italy. Those reforms went through without too much fuss, but now he has come up against a buffer, like you say, labour reforms, trying to make it easier to hire and, of course, fire people to try and get the economy moving along again. He's watered those reforms down to try and cater to the unions, but in doing that, he's rather annoyed the business community, so he's coming under fire from all sides. Let's take a look at the details.
Jump-starting Italy's economy by reforming the labor market. That's the goal of Italian Prime Minister Mario Monti.
We must concentrate on measures to have Italy grow more and faster. And we believe that although the short-term impact of these structural reforms may be nil or negative, this is really removing the structural impediments to Italian growth.
The road ahead is not without a few bumps. In a country where the unemployment rate hovers around 10%, 32% of those under 25 can't find a job. Monti's hoping to make it easier to hire and fire, a plan that's provoked the outrage of both labor unions and business lobbies. To restore growth and create jobs, the reform proposes widespread unemployment benefits for all workers, not just ones on permanent contracts. Learning contracts will be honored, and Article 18 is to be amended, making it easier to dismiss workers. The Prime Minister has promised to defend these reforms at any cost. Monti says he's willing to resort to a confidence vote in order to get it passed. Italy's main labor unions calling for a general strike in May.
Well, difficult times then, Will, of course, for Italy's Prime Minister. Things are not much rosier in Spain or Portugal. No,
let's take a look at Portugal first. The IMF has given its latest report on the country, which of course has been bailed out by both the IMF and the EU. In that report, they do say they're still confident that the bailout is big enough and that Portugal will be able to borrow on the markets in 2013 as planned. But there has been an element of doubt creeping in. It does cite the risk that the current recession may well be bigger than anticipated. And if so, then it says that cutting the deficits, cutting spending, might not be the best policy, which is interesting because until now, of course, the IMF and the EU have been really going on this bandwagon saying cutting spending and reforms together will increase growth. Some doubts about that now. Meanwhile, Spain's cost of borrowing went up after a slightly disappointing bond auction on Thursday, so that is creating worries on the markets as well, as we'll see in a minute. But you can see just spiking up at the end there of that graph. Worries there that, of course, those reforms and cuts aren't coming fast enough, perhaps, from the bond markets. So you can see the vice that the European politicians are caught between those two twin difficulties.
Now, still, though, despite worsening unemployment figures, one industry seems to be doing quite well.
Yeah, French aerospace is doing rather well, it turns out. Of course, there are giants such as EADS, which controls Airbus. Industry representative Jean-Paul Hertman, head of GIFAS, an industry body, he said that they hired 13,000 people last year, but they could have hired 15,000 if they could have found the qualified people. He said there aren't enough properly qualified workers coming out through the French education system, and it said that the plan should be for the industry to adapt the German model of apprenticeships.
We're going to have a look now at how the markets are doing, Will.
Yeah, well, if the French market were open today, it might be down, I'd imagine, because the trade deficit figures just announced is higher than expected, which is not good news. But they are closed for Good Friday, so let's have a look at Asia. You can see there a mixed picture. The Shanghai Composite managing to be up. Hong Kong is among those closed. The Nikkei closing quite firmly down at 0.81% in the negative after the dollar has slid against the yen, not helping Japanese exporters.
Well, mobile phone giant Nokia is halfway through a move to Microsoft's phone operating system. Well, it's also changing the way it makes phones. This involves moving production from Europe to Asia, which is leaving many in the company's native Finland facing an uncertain future.
Facing fierce competition in the smartphone market, Nokia is pursuing an aggressive restructuring plan. Determined to recapture the top spot in mobile phones, the company is continuing its wave of layoffs. Since last year, nearly 10,000 people have been made redundant. After cuts in Germany, Hungary, and Romania, Nokia is now turning its eye to plants in Finland. More than 1,000 employees will be fired at one of its main assembly sites in Salo, a real blow to the town and its mayor.
They said, what does it happen for me? What does it happen to my family? And what's our future? These are the questions.
The firm says it plans to move all its assembly jobs to Asia, where it already has plants in China, South Korea, and India. For the past 3 years, Nokia's lost market share, dropping below 30%, a trend the company hopes to reverse with its partnership with Microsoft. But competition is fierce. In the fourth quarter of 2011, only 1.6% of smartphones sold worldwide used Windows software. Nokia's unveiled new models like the Lumia 900 and plans to offer a range of smartphones just for the Chinese market. Its goal, to overtake Apple and Samsung and reestablish itself as the global industry leader.
Okay, we're going to look now, Will, at oil giant Total, which is still struggling to bring a leaking North Sea oil platform under control. What's the latest?
Well, they've now sent inspectors to the oil platform for the first time since the gas leak was detected back on March the 25th. It is, of course, very dangerous as that gas which is escaping is flammable. They're planning to block the well either with heavy mud at high pressure or stop it by drilling 2 relief wells. Plans similar to those used with the 2010's Deepwater Horizon disaster in the Gulf of Mexico, of course. That caused massive environmental damage. This, of course, with gas, much less of a risk to the environment, but Greenpeace are in the area monitoring the situation, and it's thought to be costing Total around €2 million a day in lost capacity.
Now, finally, Will, we're going to look at Encyclopedia Britannica, the leather-bound reference books, of course, that had ended their production. They might now, though, have a hit on their hands.
Yeah, it turned out to be quite a good business strategy for shifting these encyclopedias, in fact, because, like you say, they announced last month that they are ending production of the print edition. They are keeping going online, I should emphasise, but after 244 years, no more of those leather-bound books. So they had 4,000 of the copies left in a warehouse. Now, that was just a month ago. Now 3/4 of those have gone. They usually sell about 60 a week, apparently, and in the last few weeks they've been selling 1,000 a week. And at $1,400 a go, that's not a bad profit for a month's work. So they're already going for twice that on eBay. So if you want to snap up one, perhaps now's the time to buy.
Well, Edwards, thanks very much indeed. That was all the very latest from business. In just a couple of minutes, the very latest international headlines. Do stay with us on France 24.